Convening to find a compromise, U.S. and Chinese negotiators resumed their talks over a much-anticipated trade agreement. This as U.S. President Donald Trump seems increasingly flexible regarding the deadline of the deal. Also coming up, with the Kremlin using billions of dollars to prop up ailing Russian banks, people ask how much of that bill will have to be footed by taxpayers. I'm Chris Colbert in Berlin. Good to have you with us. U.S. and Chinese negotiators have come together in Washington to resume their talks on reaching a comprehensive trade agreement. Washington is pressing Beijing to make changes to its economic policies, which it says unfairly favor domestic companies through subsidies and other support. At the same time, China's top diplomat is demanding that the U.S. respect China's right to, quote, develop and prosper.
Good to see you.
Washington is pressing China to end practices the US says include intellectual property theft and forced technology transfers from US companies. Washington also wants Beijing to promise it will not devalue the yuan currency. The measure would aim to neutralize any effort by Beijing to counter American tariffs by devaluing its currency. China says it's keen to reach an agreement with the US. We hope China and the United States can make joint efforts to implement the consensus reached by our leaders during their talks in Argentina, and that we can work hard and meet each other halfway to reach an agreement that's mutually beneficial and win-win. I think it's in line with the interests of China and the United States and is also what the international community expects. On Thursday, US Trade Representative Robert Lighthizer is to lead a fresh round of talks with China's Vice Premier Liu He in Washington. This week's talks in the US capital follow a round of negotiations that ended in Beijing last week without a deal.
For more on this, let's bring in DW correspondent William Yang in Taipei. William, the U.S. is reportedly demanding that China keep its currency stable. What's the problem with it, and how is that demand going down with officials?
So the move is actually aiming to neutralize China's efforts to devalue its currency to counter the U.S. tariffs. And according to Bloomberg, China and the U.S. have been discussing about how to address the relevant policies because it forms the basis of the final deal. And other experts have pointed out that China will prevent renminbi from any depreciation in the dollar-yuan exchange that goes beyond 7, because that is a politically sensitive level which will force Washington to label Beijing as a currency manipulator.
Now, U.S. President Trump has once again floated the idea of pushing back the March 1st deadline. What do people on the Chinese side of the negotiations make of that?
So experts in China have told me that they think it's unlikely for both sides to reach a final deal before the March 1st deadline, because it's simply impossible for China to meet U.S. core demands before then. However, since Xi and Trump are expected to meet in Mar-a-Lago next month, they predict that both leaders will likely to strike a temporary deal which will appease the growing domestic political pressure.
Meanwhile, representatives of the private sector are holding their own trade talks in Beijing. What do you hear from there?
So we have been hearing that Wang Yi has told the visiting U.S. delegation that they hope that the U.S. can recognize the fact that China's development is in the world's interest, and the U.S. should view it as an opportunity so that both sides can eventually resolve some issues. And also China's state-run Global Times has also issued an op-ed which said that the trade talk should never put pressure on Beijing so that it has to give up its economic governance and the development path.
DW correspondent William Yang reporting from Taipei. William, thank you. Japan's exports have seen their biggest drop in more than 2 years as the U.S.-China trade war put the brakes on demand for Japanese electronics, cars, and heavy equipment. In January, Japan exported goods worth $50 billion. That's almost 9% less than the previous year and a steeper decline than economists had anticipated. On the whole, the data paints a picture of an export-oriented economy that's shifting down to a lower pace of growth as uncertainty about trade frictions weakens global demand. For more on this, let's cross over to Frankfurt and the stock exchange there with our correspondent Daniel Koop standing by. Daniel, those are some worrying figures from Japan there.
Yeah, exactly. The numbers are not very promising at all, and it really seems that all of this is again once related to the trade dispute. It's really clear that the trade dispute between Washington and Beijing has really overshadowed not just a trading and equity market, but has also really slowed down the worldwide economy. We have seen this happening here in Europe, but certainly in Asia as well. Today, once again, with these not very promising numbers from Japan, investors feel that it is crucial to get things sorted out as soon as possible. And when we talk about the trade discussions between Beijing and Washington, it seems that's the good news, that investors are optimistic that, in fact, a solution, hopefully an agreement, might be reached very soon.
And some news out of South Korea. Police raid Hyundai's quality check department following vehicle recalls in South Korea and the United States. What more can you tell us on that?
Yeah, exactly. We're taking a closer look at this raid that, according to media reports, it has not been confirmed, took place at the Hyundai's offices in Seoul. The raid was apparently mandated by the Office of Public Prosecution. So prosecutors, they started apparently very early in the morning and focused mostly on the quality assurance department. Well, why is this happening? In 2017, South Korean civic group YMCA filed a complaint with prosecutors alleging the car maker delayed fixing engine defects that prompted massive recalls in South Korea and the United States. We're talking here about 1.7 million cars. And Hyundai and Kia, they both belong together. They have denied the allegations. So now we are waiting for more details and confirmation from the Federal Prosecutor's Office.
Daniel Koop reporting from the Frankfurt Stock Exchange. Daniel, thank you. It is to Russia now, and a financial sector in trouble. Some of Russia's biggest banks can only survive thanks to financial aid from the government. Recently, the Kremlin issued more than 35 billion euros in loans to keep lenders afloat. Now, experts say that very little of that will be paid back, to the detriment of the Russian taxpayer. And as DW's Miodrag Zoric reports, the number of banks that need to be propped up like that is growing.
Pramsvязьbank and Okrytia are just two of the financial institutions that Russia's central bank has stepped in to save. Decisions that cost millions. Further losses could be on the horizon. Reports suggest that some 150 banks in the country are on the brink of collapse. Lack of capital is a major problem. The central bank maintains strict oversight of the small and medium-sized financial institutions, but it's more lenient towards the big banks. They adopt the principle of too big to fail. The central bank traditionally intervenes to prevent the demise of major banks. Smaller, privately owned financial institutions are more likely to lose their licenses if they're too low on cash. The system of regulation and supervision aims to promote competition. Strict oversight encourages competition. The reality on the ground, however, is that state-owned banks are increasingly lending to state-owned companies. The effect of all this is to dampen economic growth. Western sanctions, which make it hard for Russian banks to access international markets, have compounded the problem. The reality is that we're in the midst of a recession. It's not Western sanctions that are the cause. They simply make the situation worse. The country's increasingly shaky financial institutions are causing people to lose faith in the system. Recent surveys suggest that 1 in 3 Russians believe they're best off not parking their money in the bank.
Well, in times of growing tensions with major trading partners like the United States, German companies are on the lookout over who else to do business with. It is in situations like these that countries in Latin America shift increasingly back into focus. And the biannual Latin America Conference of the German economy here in Berlin has a reputation for being a breeding ground for valuable relations. Here's more.
Venezuelans queuing outside a grocery store, with no guarantee there'll be anything left when they finally get inside. In the capital, Caracas, many people have nothing to do but wait for food or for a hopelessly overcrowded bus. After years of economic mismanagement in the oil-rich South American country, the economy has totally collapsed. Political tensions are rising. Hardly ideal conditions for foreign investors. At the Latin America Conference for German Business in Berlin, there weren't too many who even wanted to talk about Venezuela. We believe that Venezuela has to find urgent solutions. They have to tackle their financial problems. Ultimately, that's the only way they can stop the suffering of the Venezuelan people, who are dying because of shortages of medicine and food. German businesses have been reducing their profile in Venezuela for years, despite huge potential opportunities in the country. I know Venezuela and how it was 40 years ago, and it was doing well. Now they've driven it into a wall. And I think that as soon as we can change the situation there, there'll hopefully be a rush of lemmings to Venezuela. There is a lot to clean up, there's a lot to do, if the political conditions are right. The European Union, meanwhile, has expressed its support for opposition leader Juan Guaidó. Several countries worldwide have now recognized him as the country's interim president. He also carries the hopes of international business.
And that wraps up this edition of DW Business. If you want more, you can always check out our website at dw.com/business. Or better yet, simply follow us on Facebook or Twitter. We highly appreciate your comments there. I'm Chris Kober in Berlin. From me and the entire team, thanks for watching.